Good evening and welcome to the next installment of my analysis videos. This one is going to begin on the S&P 500. Many of the patterns, levels, and analysis that I'm going to be doing will apply to SPX as well as the S&P E-mini futures, anything that the SPY is based off of or derivatives of the S&P 500. With that said, price action is extremely overextended, RSI is high, start buying puts, sell, sell, sell. Joking. Okay, now in all seriousness, RSI is very high, very overextended, which tells us that there is a tremendous amount of strength. So take it off your chart, you don't need it. You can look at price action, you can tell that it's going up. Dips should be bought, breakouts should be bought. There's no reason to be scared at this point, just manage risk. And that is my plan. That is what I'm doing. I'm trading versus levels. If a level fails, I simply get out. Now, what I'm going to be looking for is potentially pullbacks to this blue line here, which is the 8 EMA. Right now is at 282.50, which is going to be right around this level here. This level also coincides with the recent triangle that did just break and run considerably higher into the close on Friday, which we have now closed at all-time highs yet again. If you're new to this market, if you're new to trading, all-time highs are a good thing. It tells you there's still strength in a stock, and you should pretty much always trade with the trend. Now, with that in mind, price action can come back. If it does pull back, you always want to see it pull back into a higher low. What I mean by that is, draw a quick little line up here. This just goes back about a week or two. Basically, we now have 1, 2, 3 points of reference that create what looks like an upward trend. So there are a series of points down here that show we should have a higher low if price action does pull back. Now I have a couple of other lines on here that could be used for this similar purpose, but they kind of chop through price a little bit more, so they're not as accurate. Now anyways, with that said, going forward, there is a chance this could be a blow off top. We are almost to the end of the month of January, and I do want to go here to the monthly time frame just so I can show what it looks like. Now, my overall target up here is going to be $300. I expect to see this move possibly continue, maybe even run all the way up 300 really fast, because bears are simply going to have to give up at some point. I mean, there's still a lot of negativity. A lot of participants are saying, no, the market's too extended. We got to sell. We got to buy puts. Sell, sell, sell. Get out now. Blah, blah, blah. There's no real legitimate level to be trading against. At this point, 300 is going to be an extremely, extremely psychological level. It's going to be a very heavy number to get through. Expect to see a tremendous amount of volume at this level, probably participants getting out of their position. Could be completely wrong. It could not even consolidate there. It could run up to it, run up to it and blow straight through it. We could get 1 or 2 months of consolidation and then blow right through it. So right now it's just a number. There's really nothing above price action to say that there's any weakness. Now we have had, there has been a little bit of a volume spike here over the last 2 months in relation to all of 2017, but in the grand scheme of things, volume is still somewhat low. Now, this candlestick is very bullish overall. When you have volume that does coincide with a strong move up, it usually implies price action, is going to continue higher. Now, this move is very extended, so it could be due for a pullback. Not an overall reversal, in my opinion, although it is possible. Still going to stay bullish. I mean, this is the S&P 500. This is the U.S. stock market. This is based on, or at least a gauge of the U.S. economy. Nobody wants to see the U.S. economy fail, so should continue higher. We'll see what does happen. Anyways, this is just me babbling a lot. I'm looking for supports down here around 285-ish area. We have a nice strong uptrend. This whole region here from 283, 285 could be looked at as support for more opportunity to buy into either some 290, 295, 300 calls, whatever the case may be, whatever your favorite flavor of the week is. Right now, no reason to be scared. Manage risk, take trades, make money, Don't waste money on puts unless you have a very, very well-defined system that does work for you. If you do not, stick with the trend and you'll be much happier. For now, that's my analysis for S&P 500. Come join the Trade Crew chat room. Link is in the description down below. We have had some tremendous trades here in the S&P 500 over just the past, we'll call it 6 weeks. If you don't believe me, come sign up, chat with some people, see what they say. Have a good weekend and good luck.